in 2008, we began to see that the economy was changing. Things were slowing down and something just didn't feel right. Whole life insurance is a savings vehicle. So it's compared to savings accounts, money markets, CDs, maybe bond mutual funds. The first 10 years of my career, from about 1998 through 2008, most of my practice was built around doing financial planning and showing people how to invest money, try to get a higher rate of return so that they could retire and meet their goals. Investments is money that you can afford to take risk with. So you assume that risk anytime that you make an investment. The hope is that you get a higher rate of return. So I got to a point, I remember this, where I wasn't able to sleep at night. I was thinking about the opportunities and thinking about how to use this.
Welcome, everybody, back to the Save Yourself podcast, brought to you by Unlimited Wealth. Today I've got Jordan Cole, one of our cohorts, with us, and also with us we got Justin Kraft. Welcome, Justin.
Good to be with you guys.
Hey, man. Justin.
Hey,
what's
Glad
up?
to have you here.
Thank
So
you.
Justin's a close friend of ours, and we work together over at Nowlin Wealth Management. We're going to get into that and what even that means in a minute. So Justin, why don't you start us off and just kind of tell us a little bit about you, where you grew up, and how you got to 2024.
Awesome, man. Well, first of all, it's great to be with you guys. I love the show and what you guys are doing and how it's helping people. So it's really awesome to be here. Justin Kraft just turned 50. So that's my, I'm proud of that.
I'm about 6 months behind you.
Yep. So getting old quickly, man.
Yeah.
Got my AARP application in the mail. But originally loved Birmingham. We've been here since I went to college. Grew up originally in Alexander City, Lake Martin, one of my favorite places to go. Through college, started out at Georgia Tech and then ended up transferring to UAB. And that's how I got to Birmingham and met my awesome wife, Kim, while we were in school there. And knew it's a funny story. One of my good friends, I actually told him when I first saw her, this is a very cheesy story, but I said, I'm going to marry that girl. And sure enough, about 3 months later, I ended up meeting her and we started dating and did get married. So it was prophetic.
How late was it that night?
Yeah, not as late as you would think.
Yeah. Good. Enough to justify actually getting married. That's good.
Exactly. But just one of the joys of my life is being able, through UAB, having the opportunity to meet Charlie and getting plugged in this industry to help people and to truly learn so much about what financial independence really means, what has been done right in our industry to help clients, and then also some things that maybe have been done not necessarily wrong, but maybe just some old data, that ideas that worked in the 70s and 80s and 90s that maybe aren't working today. So that's my big passion, is just helping people understand, the variables have changed and solutions are new, and we've got to take a fresh look at how to solve the problems today.
Yeah. So you mentioned a gentleman by the name of Charlie.
Yeah.
So tell us about Charlie and how you met Charlie.
Thank you. So Charlie Nowlin actually founded our firm, Nowlin and Associates. I know you guys know that well. But for the listeners out there, in 1974, and Charlie moved to Birmingham from Memphis, Tennessee, and he started Nowlin and Associates. It was a traditional insurance-based financial firm. And very, very quickly, as they moved into the 80s, he realized that he needed the firm needed to make a shift and really look at holistic financial planning, which involved bringing investments and retirement plans into the picture. And he truly transitioned from an insurance firm to more of a financial planning firm. They had so much success that actually in the late 80s, Financial Planning magazine voted them one of the top financial planning firms in the Southeast, right here in Birmingham, Alabama. And it began to evolve from there into the 90s into true fee-based money management and utilizing solutions to help people with tax management. I came along and met Charlie in 1998. I had graduated from UAB and was looking for my next step in my career. Had actually verbally taken a job with a big brokerage firm that has a lion as the mascot. I'll let you figure out who that was. Yeah. Had verbally agreed to go into their training program. And one day I was on campus at UAB and I ran into Gene Bartow, another man that was just huge in my life. He was the athletic director at UAB and just a true visionary. He had followed John Wooden at UCLA and had actually gotten talked into coming to UAB. So he actually left UCLA and came to UAB to start their athletic program and their basketball team. Took them to the final Elite Eight, and Sweet 16 several times. But he was not only a great coach, he was a tremendous man. And I ran into him on campus, and he said, well, what are you going to do, Justin, now that you've graduated? And I told him, and he said, well, before you do that, you need to talk to my guy. I've been working with him for years. His name's Charlie Nowlin, and I'm going to tell him to give you a call. And I said, yes, sir, do that. I literally got back to my apartment. This shows how long ago that was. And my answering machine, the light was blinking. Yep. And I went and listened to it, and it was Charlie. So I went to meet with Charlie the next day. And the thing that you guys know already, but what stood out to me is we spent the first 45 minutes, and he was just talking about me and about, the years playing sports and what was important to me and getting to know my family. Right. We spent about 10 minutes talking about the job and the career. And I knew when I walked out of there, I called the two most important people in my life, my mom and my girlfriend, which was Kim at the time. And I said, I think this is what I want to do. So I called him back the next day, didn't know anything about the job or the career, and just said, I want to come. And he said, well, be here Monday and have a suit on.
Have your suit and tie on.
That's right.
A little different from today, right?
A little bit.
Yeah.
A little bit.
So we've come a long way, Justin. You've come a long way from 1998, meeting Charlie, first day suit and tie at Nowlin and Associates, then Nowlin Wealth Management, to now being president of the firm. So talk to us. When you started that day, nobody knew about infinite banking, IBC, right? So talk to us about what it was like, what your practice was like, and what Nowlin and Associates as a firm was like in those years before IBC kind of came into the picture.
Yeah, it's really a great question, and it was such those days really molded really who I am and how I look at finances. So early on, went into the training program, and it was really very much market centered, stock market centered. So learning a lot about mutual funds, that was the predominant product at the time, and also using, which is very interesting, also began to look at using life insurance as a tax advantage tool to help people in their planning, to where it could do two jobs. It could not only protect the family for the death benefit needs that they have, but it could also serve as an investment component to where they could grow money outside of retirement plans and just individual investments, but do it in a tax advantage manner. And learned that from Charlie very early on. And so that became a really foundational part of my practice. So the first 10 years of my career, from about 1998 through 2008, when I had a chance to meet Nelson Nash that we'll talk about later, most of my practice was built around doing financial planning and showing people how to invest money, try to get a higher rate of return so that they could retire and meet their goals, whether it's educating kids, retirement, buying houses, whatever the case may be. And then we also utilized what's called variable life insurance to build a tax advantaged alternative to invest money. And that was who we were for the first 10 years. And we were pretty good at it. The firm itself won a lot of awards, and Charlie's leadership and the people that were in the office were just great professionals. At one point in time, we had the president of the Estate Planning Council as well as the teacher of the CFP courses all in our firm at Nowlin and Associates.
Awesome. You mentioned something there, because our listeners hear a lot. Let's talk about whole life and talk about the difference in savings and investing.
Yes.
And talk about whole life being a savings tool. You referenced life insurance being an investment because of what kind of product it was, variable life or variable universal life.
Yeah.
Will you talk just quickly, 30 seconds, kind of the high level difference in variable universal life and whole life insurance?
Yeah, there's a really big difference. So variable life insurance is market-based, so it truly is categorized as an investment. And as we know, investments is money that you can afford to take risk with. Definition of risk is the possibility of loss. So you assume that risk anytime that you make an investment. The hope is that you get a higher rate of return, but what happens is we know there's a risk that it could go down in value. Look at 2008, look at 2020, look at 2001, look at 2022. Obviously, if you were in the market, those were times where the market went down in value and you put your money at risk. Whole life insurance is a savings vehicle, so it's compared to savings accounts, money markets, CDs, maybe bond mutual funds. It's more conservative, more of what is considered to be a fixed asset. But the biggest difference that I learned over time is the difference between variable life and whole life is one of those tools, whole life, you are actually a partner with the insurance company. So you invest alongside of them into their portfolios and you participate in their profitability. So you're actually a partner with them. Every other type of insurance, you're actually assuming the risk for yourself. And technically, if you dig into it, you're betting against the life insurance company. So there's a distinct difference between the two. And that's why I think you guys do such a great job of educating people that there's a difference between savings and investing. And you need to understand that. It's not that one's right and one is wrong, but how does it fit into your plan and what are you truly trying to accomplish with that money?
Awesome. Perfect.
Chronologically, so you get to 2008, like you mentioned. You've been in the business 10 years. Obviously, big financial crisis occurs, kind of shakes the whole country, obviously the industry at large.
Yeah.
Did you assess what you guys were doing or what you were doing with your practice up to that point and say, hey, what's working, what's not working?
Yeah.
What should we transition, if we should transition? How did you kind of assess things at that point?
Yeah, I wish, Jordan, I could look back and tell you, yes, we saw this coming and we were able to, shift our focus and maneuver. But the truth of the matter is, I think there's a period in life, my fate's important to me, that you feel like you have divine appointments. And in January of 2008, I had the privilege of meeting a gentleman that you guys know really, really well while we're all sitting here, mentor to all of us. His name was Nelson Nash. So I was invited to a conference in Orlando, Florida, and Nelson was one of the speakers in 2008. It was like the second week of January, I believe. And so Nelson began to talk about life insurance as a savings tool and how to take control of what he called the banking function in your life and how that could be more profitable over time than anything else you do. And boy, I heard that, and a couple of things stood out. Number one, I said, this guy sounds like my grandfather. I just immediately was drawn to him, and just liked him and trusted him right away.
Never be caught without a cup of coffee.
Yeah, never. Always in the pinky out.
Yeah, that's right.
When he drank it. But it was, that got my attention. But what I also knew is I'm like, well, whole life, as we talked about before, we were working in market type investments, stock market investments using variable life and mutual funds. And I said, well, it sounds like kind of we're in the right ballpark, but what he's talking about is different from what we're doing. Mm-hmm. And so through that, I had the privilege to get to know him, found out that he lives in Birmingham, Alabama, and his house was 3 miles away from our office. And I wish I could tell you I did it really, really quick, but it took me a few months. I finally got in touch with Nelson. I had some questions. He came into the office, and that was when we really began to look at infinite banking as part of our planning. And I think, Jordan, it had everything to do with that divine appointment. I wish I could tell you that we saw what was coming in 2008. In the summer, we began to see that the economy was changing. Things were slowing down, and something just didn't feel right. But I wish I'd have been a couple of years earlier in putting the infinite banking into place in my life and with our clients. But it was really that divine appointment in January that changed the trajectory for my financial planning life.
So, Justin, obviously a lot of what you probably heard him say in 2008 when you went to that conference flew in the face a little bit of traditional, financial thinking, right? Yeah. Mainstream thinking. And you were pretty much a traditional mainstream thinking kind of guy leading up to that. Mm-hmm. What was maybe one of the bigger hurdles, or what were some of the big hurdles like mentally that took you to get over to kind of change your thinking, as Nelson would say, to kind of shift over to more his way of thinking?
Yeah. Well, Brad, I mean, there's several. How long do we have? I admittedly am not the sharpest knife in the drawer. So there were a few concepts that I really struggled with coming from a finance background that was more market driven. The first and one of the biggest was I had always heard, and I even taught the Understanding Mutual Fund course at UAB for several years and had made this statement myself. I'd always heard that whole life insurance is a bad place to invest money. And so to hear that whole life insurance was the tool being utilized to set up this infinite banking structure and system really threw up some red flags for me. And so for a lot of different reasons, that was the first hurdle that I had to overcome, is understanding that Nelson saw a different way of using that tool. I say this all the time. Sometimes you buy a tool for one purpose, but you realize that it can be pretty good if used for something else that maybe it wasn't even intended for. Yeah. And that was kind of the epiphany with whole life insurance, is that understanding that, hey, this tool traditionally was sold for a death benefit. But if you solve for a different variable, Brad, if we solve for cash and a place to save money, if we can solve for that, then it changes the whole outcome. And it took me a minute to really get my arms around that, but that's what you guys do such a good job of educating the listeners on, is that we're not using this product in the traditional way. That candidly, that part is true. I mean, parking money in a traditional whole life policy that takes 17, 18 years to break even may not be the best place to put our money if you're looking to build up a savings tool. But if you reverse that and you begin to build it for cash value and understand that there are tools that you guys are expert in and how to design the policy so that you can maximize that cash and minimize the death benefit, well, now you've just created a savings tool that has so many great characteristics that can help us in our day-to-day lives, whether we're trying to get out of debt or whether we're trying to build assets. And that was the biggest hurdle for me.
Love it. So, all right. So we're in 2008. You met Nelson at a conference. A few months goes by. You reach out to him. He comes to our office, and you guys start talking through the questions you have. You start to get a more clear understanding. At which point did you start your first policy, your first infinite banking policy?
Yeah. So I'll never forget it. It was I was really getting passionate. I don't know if you guys can remember this feeling, but the light bulb was beginning to go off, and I was seeing how this could really impact, number one, me as a client, and someone that is trying to, build their business, someone that's trying to protect their family and build assets. I began to see how this could really be helpful. So I got to a point, I remember this, where I wasn't able to sleep at night. I was thinking about the opportunities and thinking about how to use this. But like everybody out there, I was still a little apprehensive. I'm not an early adopter. Traditionally, I'm kind of, somebody might be the first one to stand up, and then there might be 3 or 4 more, but I'll join in kind of earlier, but I'm not going to be the first one to do it. So I was still apprehensive after getting my questions answered, but I decided to put my toe in the water, as I call it. And it was June of 2008.
Okay.
So after hearing Nelson in January, waiting a few months, getting my questions answered, I did the very first infinite banking policy at Nowlin and Associates, and that was designed the way Nelson taught us to. And I put my toe in the water. It was in June of 2008, and still have that policy to this day, along with 8 more.
Yeah. So clearly, it's worked for you. You've used it a lot. What is one of the things over time from that first policy in June of 2008, as you've adapted your system and grown your system to utilize the strategy to distribute money, to do other things with the dollars? What are some different lessons you've learned in money in action and policies and infinite banking, the strategy itself in action?
Yeah. Well, what I've really learned, now that we're 16 years in with this and have had the privilege to sit with Nelson week in and week out and time after time, what I've really learned is the foundation of everything that we need to know is in his book, Becoming Your Own Banker. The first few chapters there have some examples. It has a grocery store analogy about how important it is to value your own money. Just that little, it's a 2-page analogy that is so critical. Learning that his rules of banking really do exist. The first one, as you guys know, is think long range. So when we're making a decision and when we're making a shift financially, do we want to be the team that's ahead in the first quarter, or do we want to be the ones that win the game, right? And so having a strategy and thinking long range. Second thing he talks about is don't be afraid to capitalize. So I was afraid of that first. That was one of those challenges. I put my toe in the water first, but by the beginning of 2009, I did a much larger policy because I saw the infinite banking concept in action. I had actually used it and put money to work and saw that my account continued to grow and earn interest and dividends, even though I had borrowed against it and made an investment, and that investment was beginning to pay off. So now I had 2 assets working for me as opposed to 1. And when I saw that and when I continued to invest in my education, then I knew early in 2009 that I really wanted to make this a bigger part of my financial plan.
Wow. Well, there's a lot to unpack there. And so in the interest of not having a listener have to go on a 2-hour drive from Birmingham to Atlanta to get this whole episode in, why don't we break right here and end this first part of our conversation with you, and we'll come back in part 2 and kind of continue to expand on your infinite banking system, how it's changed mindset, how it's changed kind of how you even operate with your own personal clients, and kind of unpack the rest of that, if that's okay.
Awesome.
So, yeah. All right. Well, thanks for joining us. We'll see you in just a few minutes on part 2 of Justin Kraft.